Hello, everybody. Today is Friday, January 25th, 2013. My name is Michael Wright, and this is the weekend video. Just before going forward, please do pause the recording and read over the risk disclaimer. Okay, let's jump first into performance, something we normally do. To kick things off, thus far for the month of January, we are up 431 pips, and we are still dragging a nice short Aussie dollar. We are short from 105.74. All right, so we are currently up just around 140, 150 pips on that full position. All right. So most of the video is going to be chatting about what we see going forward for the Australian dollar, and then really look to play out next week's trade. Okay. Recently, we closed out the short Kiwi dollar. Right. We closed it out. We entered at 84.40. Right. So this is our trading log here as well. So we entered at 84.40. This was a re-entry. Just prior to that, we had got stopped out at break even. Alright, we can see the same thing here. So we got stopped out just prior to that break even at 84.33, re-entered at a better price point, 84.40, 7 pips higher, and exited that at 83.65 for plus 75. And again, this was the setup that we had initially took. So played out well thus far and have bounced. Okay, so also going to talk about that. But right now the big focus is on the Australian dollar, right? So a great short from 105.74. This was the setup we took it based off of the RSI being overbought, a nice fib, and then in my opinion at that time that was a false breakout. So on average, 1 hour charts breakouts tend to be false moves. So looking at what putting your mindset in terms of what the average retail trader would do, I figured most retail traders would get long. So most market makers tend to shake out those longs and squeeze them, and that's exactly what happened, right? So again, just short that Aussie dollar. Outside of that, pretty much everything remains the same. RTM, retail traders. Well, actually, that has flipped. Aussie now, retail traders are long, so we want to stay short. Please see the Elliott waves, Ichimoku, and moving average videos for analysis this past week. Support and resistance levels also updated. Webinars posted from this past week, and the scope is also updated as well. All right, so let's jump right into the Aussie dollar. Okay. So taking a look at the Aussie dollar, again, nice turnaround. We basically literally caught the top around 105.74 on that push higher. Again, showed you that hourly setup. I'll show you again here. Alright, so right off of 78.6 fib as well as a 161, and basically we have continued that thrust lower. So first things first, head into this upcoming week. Caution a bounce in the Aussie, right? We have a 5-wave decline in my opinion. I'll go ahead and I'll count that for you guys. So this marks the new stage or the new tone in my opinion for losses lower. Right? So the count minor 1, okay, 2, and then even so there's no clear 3 to 4, right? I would like to see a 3, maybe a triangle develop, all right, something like this, and then another 5th wave into 104, even 103.80, all right. So that will mark a bigger A wave. So maybe something of this sort we may see to kick things off next week. For me, I'm not getting out of this short. I'll just keep on trailing prices lower, and then I'm looking for parity. Alright, so 3-4, then look for a 5-wave to mark a deeper correction maybe to 105, and then another C. Bigger tone while we are playing for the Aussie is this weekly setup. Triangle, A, B, C, even this could be the D here, or we slide it over almost at a double top. So D, they're looking for an E wave, so looking towards 98, but I am looking to get out near parity. Alright, If you look at the daily setup, as long as this count holds true, right, the big term, the next clear support area doesn't come into 101. All right, so I'm probably gonna look to take off half around 103, and then trail the other half until about parity. As long as we hold below the 4-hour Ichimoku, that is when I am watching. Okay, we broke below the cloud. The future cloud is bearish. Again, in my opinion, there's no reason to look for new highs. We are looking corrections viewed as a selling opportunity. Okay, and then we have also crossed below both the Tenkin and the Kijin on the daily. So the next bear signal is a Tenkin Kijin cross to the downside, which should, from my viewpoint, accelerate losses going forward. All right, so staying short. Those of you guys who are not short, who are looking for opportunities in the Aussie, in my opinion, view setbacks as a sell zone. It is really only back above 105.80 that will negate that view and lead to higher prices. But right now, we have stops at 105.40, so we're already locking in a couple pips, and we'll continue trailing. Okay, so that's that. Heading to next week's trade, looking at dollar Swiss. Okay, dollar Swiss 92 could be a big buying point. That's where we're looking to possibly get long. 92 flat. That's also around the 61.8% fib on a recent upswing. That's also a retest of trendline resistance, now turn support. And then from our standpoint, we'll look for bigger swings into possibly 95. Have a three-wave setback down here, so a lot of reasons to get long from my viewpoint with a relatively tight stop. Now, one thing I always want to reference is, you know what, seeing something is one thing. Risk management is key. Okay, without risk management, entries are just half the battle, and even exits, you have to alongside have that risk associated with it, right? Like euro dollar, we profited off of that short call, okay, last week, and we got out, and actually we got stopped out for maybe plus 40, whatever. But you see, on the shorts, we still made profits, even though we have skyrocketed to new highs. Now, this is a bit concerning, this euro dollar, because momentum divergence. This was a count that I had beforehand, looking for that fifth wave, and now in my zone we have seen that fifth wave. So this can mark a bigger A wave. So watch out for a deep setback. Okay, if you compare the euro compared to the Aussie, you see completely the total opposite. Hence why euro Aussie is screaming to the top side. All right. So watching that as well. Measured move we just hit. So I wouldn't be surprised to see Euro Aussie have a setback, possibly into 128. That will lead to a little pop in the Aussie dollar. However, upside risk to remain, in my opinion, for the Euro Aussie. So be careful if you are watching that. Elliott wave count pretty clear. See here, we had a minor setback, but then reworking that to the top side. No way to see that on major reversals. Pound Aussie is one in which I think could really gain some strength on the back of the pound dollar. Pound has been remotely subdued, but as of late has reached a measured move. You know what? We called out for this long around 157.83. We closed it out for just a -2 loss ahead of, I believe that was the UK GDP report, and it just took too long. It took about 4, 8, 12, 16, 20, about 24 hours. That's way too long, all right, just to not bounce off for support. For me, the way we trade over here at Right Time Capital Global FX Club is that we look for bounces off of key support and resistance areas to add conviction, because for the most part what you see is that if it holds for too long, it usually starts flagging, right? And then a flag triangles, these are continuation patterns. So I'd rather just take that -2 pip loss versus a -50 pip loss. All right. You know, there's a great saying by a great trader, which is, I'm only profitable because I cut my losses short. Alright guys, well I want to thank you all for watching the weekend video. Good luck trading next week. Cheers.